Hi everyone, this is Rob Roy and welcome to the LA Wave Options U.S. Market Update. The big news this week, I think, was the inversion of the 210 yield curve. That occurred on Thursday. The 530 inverted today. What does that mean for the markets from a historical standpoint? And you may have heard that the Biden administration announced that they're going to start releasing 1 million barrels a day from the Strategic Petroleum Reserve for 6 months. What could that do to the price of oil? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Before we get to the charts, we're coming up on a milestone here at LA Wave Options. We're nearing 30,000 subscribers to our YouTube channel. We want to thank you for that. So as soon as we hit that 30,000 milestone, we're going to give away 5 of our AI-based time strategy alert subscriptions. To enter, all you have to do is be a subscriber and post your favorite Chuck Norris one-liner. Almost a recording doesn't go by that somebody doesn't mention, hey, has anybody told you you look like Chuck Norris? Yeah, I hear it all the time and I'm flattered by it, hence the hat. So we'd like you to post your favorite one-liner. Here's my favorite Chuck Norris one-liner. When Chuck Norris does push-ups, he doesn't push himself up, he pushes the earth down. I'm sure you've heard several of them out there. So let's have some fun with this and celebrate crossing that 30,000 subscriber milestone. All right, so taking a look at the charts, you can see here that we have the market. We had a bit of a dragonfly type doji today where we opened at the high of the day, traded lower, came back and closed near the high. Now opening at the high of the day, that's not really that significant because today was the first trading day of the month. If you've heard me talk about this before, that's when institutions put new money to work through dollar cost averaging programs, people putting money in their IRAs, 401ks. The institutions put that money to work in the beginning of the trading day of the first trading day of the month. Now we went down and tested the 10-day moving average and were able to close back near the high. Now that's normally seen as a bullish sign. So from that in mind, you would think there's the potential to move higher. We did have the downward move the previous 2 days. We talked about Rick Santelli talking about this major rebalancing where funds had to sell equities and buy bonds. And so that seemed to play out. And interesting day today. Let's take a look at the volume on top of this, and you can see average volume. So average volume doji, something to pay attention to. See how that plays out at the beginning of next week. But one thing that I wanted to take a look at is interest rates. So taking a look at the 10-year, it actually went down today. Rates went down, which meant money moved into bonds as well. So is the dragonfly doji suggesting potentially more upside going to be right? Or is the fact that money went into bonds suggesting that money may be coming back out of equities and into bonds at the beginning of next week? So some of the big news this week, certainly if you've been paying attention to the financial networks, has been the inversion of the yield curve. This is Thursday's chart of the 210s, which is what a lot of people watch. Now, why do a lot of people watch it? Because it has an amazing history of predicting recessions. 98% of the time, when you have an inversion in the 210 yield curve, you see a recession within 1 to 2 years. So it's not like something that happens right off the bat. And already the commentary is coming out, oh, it's different this time. Well, I stay with the words that Jeffrey Gonlock, who's known as the bond king, came out and said yesterday, yeah, you're going to hear all the white papers of it's different this time. Don't believe them. I have that same viewpoint. It's never different this time. In fact, today, the 530 inverted. Now, if you want a little bit of history on that, that hasn't happened since the 1980s. But the last time we had an inversion on the 210, you ready for this? 2019. What happened in 2020? Of course, you know, we had COVID, etc., but still, we had an inversion before it. So here's the chart of Thursday. You can see we went below the zero line. That means we went negative. That's the inversion. We came back up, but we're barely above that line. So the fact that we've inverted on both the 210 and on the 530, which is far more rare, very, very good chance we've got a recession coming sometime off in the future. Well, if it's a year or two away, does that mean we can't rally in the meantime? No, we can, but it means that that's something to keep in the back of your mind, especially when you think of, yikes, what happened in 2020 after the inversion in 2019. So I'd look at the dollar real quick here as well. We had that bit of a triangle, and we've kind of morphed into a bit of a trading range. One of our subscribers in last night's insiders meeting, which we do every Thursday night for our alert subscribers, and we have a Q&A, and we chat, and that's only for our alert subscribers. You could see that they were talking about, was there a flat in there? And there really was a flat in this kind of sideways pattern. But what made me feel a bit more comfortable today is that we had a little bit of a bounce to the upside today. So it does look like we're kind of moving into a bit of a trading range here. Maybe we go into another flat. We'll just have to wait and see and have a double flat back to back. But when we look at this, as I've said in the past, even if we broke to the downside out of this, as long as we hold 97, I'm okay. What would really concern me is we've got the inversion of the yield curve. We know what's going on globally. And if we lose the dollar, that could signal some really serious things from an economic standpoint, a global economic standpoint. So looking at some of the other markets, looking at the diamonds, you can see that we have a pretty nice 5-wave impulse pattern to the downside. Clearly you can see that the wave 4 retraced 73%. Now Elliott wouldn't like that. Elliott didn't like it when you got a corrective move of 70%. But if you follow the letter of the law, it has to get to 78.6% to fully disqualify. And looking at the Qs, as I've mentioned, I really feel the Qs are going to underperform this year. It doesn't mean they can't be higher. I just think they're going to underperform the Dow and the SPY. And you can see the wave 4 corrective move here is right at the 61.8% level, which is my favorite fib level. So the Qs are going to have a hard time breaking through that. Could they? Yeah, they could, but that's going to be a pretty significant point of resistance, and that is about as classic of an impulse pattern, a 5-wave impulse pattern, as you could find. So do we go that low on the Qs? I think a lot depends on what happens with interest rates, how the Fed acts at these next couple of meetings. Do they raise 50 basis points at the next 2 meetings? So there's some time here. We'll see what happens basically at the next Fed meeting, because higher interest rates is going to be a problem for the Qs, as we've talked about in the past. We look at the IWM, and we did have this break here. We talked about this on Tuesday night's TradeFinder. And by the way, if you haven't signed up for TradeFinder, why not? It's free. We do it every Tuesday night. We look at the markets, we look for trade ideas, and we also have a Q&A there. And so you can stream the TradeFinder or view us on Zoom, etc. But we talked about how we had broken to the upside here above that 210, and was that going to finally break out of this trading range? We had that big trading range for 2021. We'd already started one in 2022. Was that going to continue throughout the rest of the year between now 190 and 210? So we broke above it. Could it hold it? Nope, it couldn't. No follow-through day. If you've heard me talk, you know you have to have a follow-through, a confirmation day when you break a major point of support or resistance, and no follow-through day. So here we are back in this range, and then when we add the Elliott wave pattern on, you can see we're in a 5-wave impulse pattern now on the IWM as well. So does that mean we break out of the downside? I'd have to see that with the fact that the IWM has been range bound now for a year and a half. Yes, the range changed a little bit, but nonetheless, we've been range bound for that entire time. Oil. Well, the Biden administration announced yesterday, you may have heard that as well, that they're going to release 1 million barrels a day from the Strategic Petroleum Reserve. And that sounds like a lot, doesn't it? OPEC also said they're going to raise their production, but only 400,000 barrels. So it sounds like, okay, now we've got all this extra oil coming on the market. Oil's going to go down. Well, I think it's important to note that even though we're going to be releasing, they say, for the next 6 months, it's never been done for that length of period before, 1 million barrels a day from the Strategic Petroleum Reserve. That's only 5% of our consumption. So in the grand scheme of things, it really doesn't make that much of a difference. And you can clearly see this pattern here. If you're looking at it, we have a 5-wave pattern, impulse pattern to the upside here, but look what we have right here. And one of our subscribers noted that last night in the insiders meeting as well. Have you seen that triangle in the USO? Oh yeah, I've been watching it very closely. Look at oil every single day. So something's going to happen with oil. We're going to get a pretty decent breakout, because that's a pretty wide mouth of the triangle there. Does that mean we run up and hit that wave 5 high? That on top of interest rates, the inversion of the yield curve, you can see that there's a lot of signs here that there's trouble ahead. So looking at some of the other commodities here, you can see that With gold, there's a 5-wave pattern to the upside here as well, and a 61.8% wave for correction, which looks great. But then there's another triangle here, and you can see this triangle right there. And which way do we break? When you see a triangle, to me, it supersedes the other patterns. Now, Elliott in his writings would say that, well, if you're in an impulse pattern, you have a triangle, it's likely to break out in the direction of the impulse. My experience has been when you have a triangle, respect the potential to break both directions. So we'll see. And if we take a look at the SIL, which is the miners for silver, not the SLV, but the miners, we do have a strangle that we sent out for our alert subscribers at Elliott Wave Options on the SIL, because look at that. What a nice ascending triangle pattern that we have here. And if you look at the DMI, the ADX is really low, indicating that there's going to be a breakout in the not too distant future. So that pattern was just so strong that we went ahead and sent that alert out for our alert subscribers. Looking at the commodity ETF, you might as well, if all of the individual commodities that we're looking at are in triangle patterns, what a shocker. The ETF is in a triangle as well. Maybe just trade that. Just trade a strangle on the ETF and not worry about all the individual commodities to figure out which ones are going to break or not. It looks like the entire ETF wants to break out, and another really, really well-formed triangle there. So I don't think you could go wrong looking at a triangle there. Another market that I wanted to take a look at is Canada. We've been looking at that the past couple of recordings. We broke through a major point of resistance there at 40. We kind of did it in a bit of an overbought condition, and I made the comment the best thing that could happen is to consolidate above that 40 level, and then you're gonna have enough energy to run up and try to hit that wave 5 high, and that's exactly what's happened so far. But look at today. Came back, tested that 40 level once again, broke below the 10-day moving average, but it was resilient. It was able to close back above the 10-day moving average. So if we get some calming here, I think the Canadian market can hold that 40 level and break back to the upside. But if it breaks back below 40, then we're probably in this wave 4. And in TradeFinder on Tuesday night, we had a viewer from Canada that was saying, hey, if we break below 40, does that mean we're in the wave 4? Very likely. So we'll see how that plays out. So I wanted to share that with you as well. All right, as we finish off with the VIX, as we always do, that vertical move to the downside really hasn't had much of a bounce. A little bit of a bounce yesterday, right back down today. And when I talk about vertical moves, it's not just to the upside. You can see on the VIX when we go vertically up, as we did here and here and here, often we come vertically back down. Well, we did spend extended time in an elevated move, but it wasn't quite the vertical move to the upside. So we don't really have that same vertical move up, vertical move down. But here we do have a vertical move down. So I would be cautious of the fact that we could have some sort of a snapback on the VIX. I think we want to keep an eye on that in the coming week or two. But you can see lots to look at, especially at the beginning of next week. And we'll be back to tell you how it played out. Again, don't forget to post that Chuck Norris comment. Be a part of our drawing. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.